Good afternoon or good morning, wherever you may be. I am Alina Islam, and I'm a mining analyst here at Red Cloud Securities. Thank you so much for joining us today. I'm very excited to present Cobalt Blue Holdings to you, a company focused on building its cobalt nickel refinery in Western Australia. To talk about this cobalt nickel refinery, as well as upcoming development plans, we have Joe Kaderavek, CEO of the company. I know you'll have a lot of questions after the call, so please put your questions into the chat box and we'll get through as many as we can. Before we get started, though, I do need to mention the fine print. For Cobalt Blue Holdings, there may be some forward-looking statements made on this webinar. Please read the cautionary note on page 2 of the Cobalt Blue corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this webinar does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. And with that, I'll hand it over to you, Joe. Please take it away.
Yeah, thanks to Alina. For those I've never met before, my name is Joe Kaderavek. I'm the CEO of Cobalt Blue, and good morning and good evening wherever you are. It's my pleasure to be presenting to you today with respect to our business. And I'd like to make two broad points in this presentation. Firstly, introducing our business to you. We are ASX listed, and it may have been up until now, we may not have been visible to you. And secondly, explain a little bit about the cobalt market and where it fits ultimately within the battery and EV space. So with that said, let me kick off. Firstly, a little bit about a capital structure. As I said, we're ASX listed. We've been listed since 2017. We're a very plain vanilla company in the sense of our structure, just over 400 million shares outstanding, a little bit over 10% of that in various options, a small amount of performance rights for management. You'll notice a promissory note. That's, again, a small amount of debt that we incurred in M&A to get to the point where we are today, and that was to buy out 100% of our Broken Hill Cobalt project. Our market cap is very small at the moment. We've had quite a negative run with respect to the cobalt price. However, there's plenty of reason to suspect that the pricing has stabilised, and we look forward to effectively improving upon that with our self-development, as I'll discuss. Share price today is just under 10 Australian cents, but plenty of cash on hand. We've recently performed a raise. We have some 9 million Australian cash on hand, and money for organic needs for until calendar year 2025. Now, let me talk to you about the business globally. We have three pillars to our business. Firstly is our Broken Hill Cobalt project. This is a unique project in the sense it's a primary cobalt mine. Cobalt is typically a byproduct. Globally, it is mined as a byproduct of copper in Africa and of nickel in the rest of the world. Broken Hill is unique in the sense it's a primary cobalt mine. It's large. It's 3,000 tonnes per annum of metal equivalent. It only has one byproduct, which is elemental sulfur. It has been recently awarded major project status by the Australian government, and it will represent one of the largest non-African feed mines into the global market. Unfortunately, given the cobalt price today, it is on a review process. In other words, we're looking to make it a more profitable, smaller mine that works in this current environment, with that review producing initial results middle of next year. For the Broken Hill project, we have found a project partner in Iwatani Corporation. Iwatani is a Japanese trading house. Those of you familiar in the gases industry would know the name. They're the number one importer of hydrogen into Japan, but they're also, quite interestingly, the number one importer of lithium and cobalt chemicals into Japan Inc. So they supply cobalt and lithium chemicals into those battery industries that ultimately produce batteries for the brands, the EV brands that you see on the road. And within the US, for example, of the top 10 mass passenger vehicles, 4 of those are Japanese. From the top, that'll include Toyota, Honda, Subaru, etc. So this is a very a space that's dominated by Japanese brands that you and I would recognise in the streets. So Iwatani brings to the partnership a long and dedicated history of trading those materials, but also in the case of the second asset, which is our Kwinana Cobalt Refinery, which is the key reason to be speaking to you today, they also are our landlord. So Iwatani has a large parcel of industrial land in the Kwinana area. Kwinana is a district just south of Perth. And so we're in a process of setting up some agreements with them, and ultimately that'll culminate in a binding partnership such that they will lease us the land and become our landholder, but also Iwatani Japan will become our joint venture partner as a joint venturer in the business. On the slide, you can see a number of the pathways to construction milestones. We are in discussions with respect to targeting a binding arrangement with Iwatani. We're well entrenched in feedstock arrangements. Now, all the feedstocks that we'll be sourcing will make this refinery IRA compliant. We're very focused on Western world supply. We're very focused on generating the premiums that are associated with those supplies. So in the US, that's largely led by the Inflation Reduction Act, which I'll touch on shortly, which is a decarbonisation act, but also globally there are other initiatives, particularly in the EU, for preferential sourcing of Western world supply. And it's all about diversifying supply chains away from the current dominant countries involved. So feedstock's well underway. Offtake arrangements are also well underway. We have a significant amount of term sheets out to look for interest for offtake in this space. And given the timeline, which again I'll touch on shortly, shows us in production in 26 and then through the validation period, which is a period whereby we have to prove our product, and ultimately in full commercial production in 27. That's very attractive for most EV OEMs. That's the time in their own development when they have committed to and built their initial gigafactories. So a lot of what you see in this space, particularly in North America, those factories are currently either being built or about to, but they won't be in any form of production until 26 or 27. We're doing a lot of technical work on the refiner itself, sites and approvals, engineering work. I'll touch on that a bit more shortly, but that's well in hand. And we expect a final investment decision on the refinery in Q3. For both the Broken Hill project and the Kwinana Nickel Refinery, Cobalt Nickel Refinery, we're looking at Iwatani coming in a partnership at minority levels, typically around the 30% mark. The final part of our business on the right-hand part of the screen is our Remine business. This is a business that we've been undertaking now for some 5 years. We're using the identical technology that we developed as part of our cobalt mine in extracting cobalt and other metals from mining waste. It just so happens in Broken Hill we have cobalt in pyrite. Pyrite, typically for gold or copper miners, is a waste product globally. However, those minerals can be pregnant with metals for commercial production, typically residual copper, some cobalt, but also, interestingly, some precious metals. We're coming across quite a few opportunities with gold and silver in them, and they're sitting there at waste, at surface, pre-crushed, effectively looking for extraction. One of the biggest draw cards of this business to us is the fact that we're rehabilitating tailings dams, and our process extracts sulfur from the sulfide mineralization. So what does that mean? It means the very element that causes acid mine drainage and is probably the number one key environmental concern of waste dumps in mining. We're extracting that very element that causes that that acid mine drainage, and actually commercializing it into the market. And so sulfur typically goes in as a precursor for fertilizer. So with respect to one of our partners, which is Hudbay, with their Flin Flon mine in Manitoba, we've done an extensive amount of test work. We announced that last year to look to commercialize and rehabilitate their mine waste. Hudbay is a very socially conscious business, so with that, they're quite aligned with us. They have a social obligation to effectively try and rehab the mine waste from their Flin Flon mine, and the mine recently having been shut. So we're working with them on that, on the technicals, and we hope to, at some stage in the near future, morph that into a commercial discussion. In terms of our own opportunities domestically for remining, we're partnering with our government. We've identified 6 opportunities to date to do test work, which we're undertaking. And those test work arrangements span a number of different states in Australia. And again, trying to both extract the commercializing of potential commercial metals in those waste streams, but also look to rehab that mining waste so it leaves a lower footprint. We're also working with the European Raw Materials Alliance, so we're looking to undertake further test work in Europe itself. There are significant opportunities in the first world countries. These are countries that have typically been through mining processes but now have the legacy tails and waste dams. So, for example, in Spain, the Iberian Pyrite Belt is a very, very ripe opportunity for us. And then finally, we've recently signed a cooperation agreement with Regeneration. Regeneration is an amalgam of like-minded miners looking to extract product from their tails, but also rehab, but also a number of consumer industries, some very, very large consumer industries in both electronics and other consumer goods, looking to source their metals from effectively repurposed or recycled metals. So that's a quick introduction about our business. Let me move on with respect to what we want to do about it. We're building an allied supply chain, full stop. If there's very little else you remember from this webinar, think of us as a new entrant, an Australian entrant. We've had 6 or 7 years now of technical development. We're highly technically competent. We are run by engineers. We understand how metals are both extracted and then processed. And we've been cracking the code with respect to high purity sulfates now for over 4 years at scale. In fact, I would say to you without any hesitation, we would have the largest and longest demonstration facility, longest run facility in cobalt in the world as a junior. This chart is very busy, but I'll just touch on 2 pages here. On the bottom right shows the Cobalt Blue positioning with our refinery at 3,000 tonne of metal. It puts us in the top 10, but it's an industry dominated by China and Indonesia. Ex-China, ex-Indonesia, there's only currently one large-scale Western world refinery. And even if you include those who are looking to come into the market, such as I know in Canada, there's a company up there looking to set up in Ontario, and then you include us. These are very, very small refineries in an industry dominated by China. The other point I'll make with respect to this slide, sulfate refining is the conduit. It's the link between the mining industry and the battery industry. So you're turning and I'll use the term dirty product, which is a mixed hydroxide or a mixed sulfide cobalt that comes from a mine, and you are purifying that to a 1, 2, 3, 4 parts per million product in terms of zinc or copper or iron content. So you're turning it from a mined product into a chemically acceptable product, high purity product that will go into the EV battery chain. Without these links, without these refineries, you have no downstream. And so what's really interesting is there's an opportunity for us here to effectively become a supplier to the EV industry and enable, if you like, collaboration in this space. So with respect to Kwinana and Perth, we're setting ourselves up in the same neighbourhood as lithium, as nickel, as manganese metal passes through. So Perth or Kwinana is the only district in the world where all the elements of the battery cathode pass through. And that's an important point, because once we're up as a producer of cobalt sulfate, it then makes further collaboration into precursor or PCAM much, much easier to do. And that's a very attractive part when we talk to our own government with respect to government funding or debt or equity assistance. They see us as an enabler of a future industry. On the bottom left, I'll just quickly touch on some of the targets of the Inflation Reduction Act. I mentioned it's a decarbonisation act. You're probably all very familiar with it. If you convert the amount of EVs that the Americans want to have on their roads in order to support their decarbonisation limits, and then you back calculate how much cobalt is needed, that's the red line, the red curve in the bottom left chart. If you then add today's current IRA eligible supply, which is the blue columns, and then if you add on top of that Indonesian supply, there is no formal ruling yet on Indonesia, whether it will qualify or not for US purposes. But if you add the Indonesian supply, which is the green column, you can see that years 24, 25, and to some degree 26, there's enough eligible cobalt to support US strategic demands. Unfortunately, even with Indonesian supply from 27 onwards, there just simply isn't enough metal to support their decarbonisation targets. And so what I would say to you very succinctly is, today, whilst the IRA is in its early phases, today, whilst the IRA hasn't even excluded foreign entities of concern material, so for example, Chinese material is not yet excluded and will not be until January of next year. Today, while all those elements of legislation are being put into place, think through the next few years until there's a genuine demand scarcity, which is coming. In terms of the refinery, will be an FID, final investment decision, in Q3. That's the completion of financing and contractual milestone there. We'll be doing first pre-construction work on site in Q4, so that's this calendar year, pre-Christmas, and then ultimately we'll be in a 12-month construction period. So that means that we'll be finishing construction back end of 2025. That's not very far away. And 26, we're looking to validate the product. Validation is a necessary process between the refinery and the automotive or EV industry. It means that we have to prove our product on a scale and to a purity that supports their needs. The EV industry will not let you enter the chain unless you've gone through a very rigorous test regime, and that's what validation is about for us. So we're geared up for that. We've had, as I said, 4 years of making the product. And indeed, we're already starting validation at our smaller scale demonstration facility using the identical feedstock that will be used in the commercial plant in Kwinana. So we're using the identical chemicals from the identical miners to make a Japanese and an American spec product. We have those specs, we're making them today. So we've started those discussions for validation. And I believe we'll get through that process successfully. In terms of the refinery, just some more data for you to put some context onto it. The top right-hand side of this slide shows a drone photo of the site. It's a retrofit on a brownfield site, effectively. So what you see there is an industrial site. Iwatani currently use that for their mineral sands business, fused zirconia business. But what you can see there is an existing power layout, a 132 kV yard. It's got water, it's got road, it's got site access, it has a weightometer, it has buildings, it has a laboratory. It's a very, very good fit into a very, very sought after district in terms of that collaboration I mentioned before. 3,000 tonne of metal equivalent cobalt is our stage 1 target. To put that in some perspective, that's enough to produce about 400,000 electric vehicles, fully battery electric vehicles per annum. So it's a sizable enabler of a downstream EV industry. We have full support of the Western Australian government with the Premier's letter. We have an IRA eligible ruling given to us from a legal opinion. So we've already sought US legal opinion as to whether we'll be eligible for those clean vehicle credits under the IRA, and that opinion is certainly very positive. And I'll talk about the financials in a moment. From a portfolio perspective, the top right-hand side of this chart, I'll just touch on it very briefly. The nickel refinery, the cobalt nickel refinery, gives us a through-cycle investment. In other words, even today at a cobalt price of $11, $12, this refinery makes a very good margin. Why? Because it buys feedstock at a certain payable metal price, and it then sells that same feedstock at a premium price to that. So in actual fact, there is a conversion margin, and a healthy one, which we can target at a low cobalt price all the way up to a high cobalt price. It doesn't give us the leverage of a mine, and you can see in the right-hand chart, the red line, it's fairly flat. It operates in around that 20 to 25% region post-tax, whereas the mine, the Broken Hill project that we currently have under review, gives us much more leverage. But what it does do is it gives us optionality in the portfolio. Here is a low capital, more defensive asset that operates through the cycle. Here is a high capital, high leverage cobalt play. The Broken Hill mine will have its day, but it will have its day in an environment that's more supportive, whereas the refinery will work through that. That's pretty much it on this slide, just to say that the refinery does make a margin through the cycle, and that makes it very attractive from both government assistance but also commercial funding. The Broken Hill Cobalt Project, I'll just summarise on that. Located near the namesake town in Western New South Wales, making the two products of cobalt, the cobalt intermediate from Broken Hill will feed through Kwinana's refinery, and that'll become a stage 2, if you like, of the refinery. That'll be a more 27 timeframe for us. It is a major project status, or has that backing from the Commonwealth Government, and we've got 7 years of technical work and assessment leading up to the demonstration facility, which I'll talk to shortly. And that technical facility has allowed us to make 3 commercial products: the cobalt sulfate on the top right, which is our core, nickel sulfate, which we're making out of any residual nickel, again, battery destined, and then elemental sulfur, which I mentioned earlier is a precursor for the fertilizer industry. We've been running pilots and demonstrations now for a number of years. The target to date has been some 70 million in project investment across that. So it's quite a sizable footprint and investment in this space. And this is a very technically competent business. And we've started a global sample campaign. So our samples have gone to approximately 20 partners globally. And because our commercial partner is Iwatani, we're well aware of the Japanese chemical standards in this space, and they're amongst the toughest in the world. So we're very confident we can customize a cobalt sulfate to the right spec with the right OEM. And this test center, of course, can be used because the upstream part of this center supports our Remine business. So we're using this facility as well, not just to make sulfates from third-party product, but also to look at remining opportunities globally from mining waste. And that leads me on to the Remine business. Every year, tens of billions of tonnes of mining waste effectively go to waste dumps or tailings dams. Globally, governments are now looking to recycle metals. You may have heard a lot about recycling, particularly in the battery space, from grey mass, which is spent batteries. There is an order of magnitude greater opportunity set in mining waste than there is in the battery space, purely because we've been making mining waste now for hundreds of years. And particular in this space are base metals and the opportunity to extract copper in particular, but also some of the more critical minerals. And there are also waste opportunities there for precious metals, particularly gold. So the goal really is to set up a circular economy within sovereign jurisdictions. The Europeans are very advanced in their legislation here and have mandated minimum recycling limits for, excuse me, for their metals going forward in battery cathodes. We've had strong success. We're getting very high rates of extraction. Typically, in the base metals field, we're getting 90 to 95% extraction. And not surprisingly, the pyrite that we have at our home project in Broken Hill behaves fairly similarly to the pyrite that we've investigated in other states, and also I mentioned earlier in our Canadian relationship with Hudbay at the Flin Flon mine. We have a patented technology with respect to that processing, which I think gives us a very strong edge, and we're the only process, with the exception of full roasting, which is a process which is extremely capital intensive, but also has some question marks on its environmental stability. But we're the only process, with the exception of full roasting, that actually commercializes the sulfur and removes the sulfur from that mine waste. So we leave the tails and waste dumps in a far, far lower acid forming state than when we began. And that's a key part of the commercial attractiveness of this technology. I'll just finalise on the Hudbay opportunity itself. I touched on that earlier. We're working with Hudbay in a technical cooperation on their Flin Flon mine in Manitoba. The commodities in that range across a number of the base metals, zinc, copper. There is a bit of gold and silver there as well. We've done test work with them. That was received in August of last year. I mentioned earlier that their pyrite behaves no differently to the mineralised pyrite that we've dealt with before, and we're in the process at the moment of finalising a technical worksheet. But look, Flin Flon as an example, and pointing to the broader market, there's 100 million tonne or so of opportunity there. So it's pre-mined waste sitting at surface, it's ground, and in fact, it's compared to a primary mine or extraction from in the ground. You are cutting typically a quarter to a third of the cash costs in extracting that metal. You're cutting typically a quarter to a third of the cash costs out of that process with a remining opportunity. That's all I have to say in this presentation. I'd like to turn back to Alina now for any potential Q&A. Thank you.
Thanks a lot, Joe. Thank you for introducing us to Cobalt Blue. So we can get started on the questions now. Just as a reminder to everyone on the line, you can type your questions into the chat box at any time. So Joe, just a couple of questions here. You talked about, Electra and yourselves on that slide there. Could you talk about maybe some of the other players in the space? Anyone as advanced as you are in the process?
There's thank you for the question. Let me just make 2 points. One is on the scale of the entrance in this space. I mentioned earlier that in sulfate refining, it's a conduit between the mining industry and the battery or chemical industry, but it's a space that is full of juniors. If you look at all the entrants in this space, Electra you've mentioned, Javoy is another one globally that's listed. There is a couple of North American businesses, I think typically private entities or non-listed public entities who want to get into this space as well. But they're all juniors because in the mining industry, the majors want to sit on their tier one assets and do what they do best, which is extract from ground. They have had poor experiences or limited experience in the past in refining. So it's not a natural extension for a mining company. In the downstream, in the chemical industry, they've got very little experience in mined products. So you have this gap, this chasm between those two industries, which the juniors are trying to fill. And it's where we see a tremendous amount of opportunity. In terms of those other juniors, I touched on them a moment ago. We're well aware of the Electra project, have a lot of respect for that team out in Ontario, and they would probably be in a similar development position to us. Everybody else who's looking to get into this space is really still at feasibility study and research level from what I can see.
Okay. On your timeline slide there, you had the permitting process at about 6 months. Would you expect any delays to that?
Yeah, well, one of the strengths of our project concept is that we're using an industrial an existing industrial site. So it's not a greenfields. We're not setting up a site in the middle of some pristine area or in a neighbourhood where industrial activities are not the norm. This is already permitted for industrial activities. So our guys our team's already started with a collaborative team on site. So we have Cobalt Blue people on the site working with the Iwatani people. We've had very strong initial development of those permitting and approvals. We expect to be lodging those before year end. In fact, we expect to be lodging them around the Q4 mark, and then that being turned around pretty quickly. And the reason why it should be turned around quickly, it's a repurposing of an existing permit. It's a modification of a permit that already exists. So very confident we'll get our permitting together as in approvals in early calendar 25.
Okay. On the feedstock, so which jurisdictions have you tested samples from?
Yeah, so firstly, we are an IRA compliant, refinery. So that's the strategy. So what we have to do is source from extracted material that complies for clean vehicle credits under the IRA, to be technically correct. So firstly, on January the 1st, 2025, if you're a foreign entity of concern, you'll be eliminated from that eligibility. So that takes out, in this case, Chinese and Russian material in particular. So we have to source from non-Chinese owned, non-Russian owned material. The other aspects of the IRA, not directly, but indirectly, the OEMs want high environmental, social and corporate governance, ESG material. So we also have to source from industrial mines and ones where there's a sustainable process in place. So that eliminates artisanal and any of these other unsustainable practices. And what we've done so far is identified 3 large sources of that product. One of them is in Australia. We have tested that product. We've got 5 tonne of that product there, and we're about halfway through that test work. And that test work's been invaluable because it allows us to become somewhat agnostic on the feedstock. It allows us to take a high magnesium or a high cadmium product from somewhere and then process it to the exact same spec as if it were another feedstock. The other point on the Australian materials, as we've said to our government, because we are looking for a show of support from both state and federal government in Australia, we are in front of them for a number of grants. We're in front of them for some debt and equity support in this space because they see us effectively as an industry maker. They see us as that conduit, as I mentioned before, between mining and battery space. There will be no battery industry in Australia unless you can make sulfates from nickel, cobalt and manganese, full stop, and they appreciate that. But what we've said to the government ideally is that we'll be the conduit for any new Australian cobalt produced in Australia. So effectively, cobalt's a byproduct. Any new, typically nickel mine that comes in with byproduct cobalt, we can process that and we'll continue to assess that. You asked about our feedstock. We've now sourced another 2 samples globally that are IRA eligible, and we're looking to chemically deal with that. And one of those, we're about a third of the way through that test program. And frankly, I think we've hit some very strong success points. So we're getting to a point now where we're getting more and more agnostic to the feedstock while hitting these very tough downstream purity targets.
Okay. So you mentioned 60 million for the initial capital for the 3,000 tonne of cobalt sulfate, but what would be the additional capital required to grow to 6,000 tonnes?
Yeah, thank you. So in Australian dollar terms, 60 million. Why is it so cheap relative to some other stickers you can see? It's because it's a brownfield site. We're not doing any of that non-process infrastructure. I mentioned, for example, 132 kV power on site. That's directly there when all we're doing is putting a power meter on into our shed. So 60 million is a 3,000 tonne modularised flow sheet. To double that is only in the order of another 15 to 20 million because it will reside on the same concrete, the same shed, the same power hookup. So at this point, to modulise from 3 to 6,000, let's call another 15 or so million. And the design of stage 1, I should add, is being in a modular fashion. So we're racking certain parts of the flow sheet and then we'll look to either build above that with more racks, but ultimately try and make efficient use of that space. We're also introducing some smarts. Unlike some historical cobalt refineries, we're only going to make one product, which is cobalt sulfate. So you make one product, it significantly reduces your footprint and your complexity of processing. We're only going to be sourcing from 3, maybe 4 sources at most. So that also significantly reduces your complexity of feedstock handling and feedstock processing. So if we put it really crudely, we're going to be a McDonald's, a very large scale producer of 1 or 2 spec'd cobalt sulfate products. We're going to have 3 or 4 typically offtake partners. So in essence, it's a very, very simple concept.
Okay. So for Broken Hill, other than the current pricing environment, is that the only factor or reason why that project is being looked at now?
Yeah, thank you. So we've spent 7 years on the project. We have effectively come close to a definitive feasibility study. We had a PFS issued in 2020 on long-term cobalt prices, which is around $27 a pound. This project makes very, very good margins, very successful. But today, just to give you some idea of today's market, there's a $12 cobalt price. So it's less than half the long-term price, and it shows you the glut of material out in the market. From a strategic sense, the US and its partners do not see any coincidence between this glut of material and the EV take-up, EV revolution, if you like, that's coming. So it's not a coincidence that we're being flooded. We're being flooded by countries who are stimulating this supply to suit their own ends, and the rest of the market effectively then is disincentivized from bringing into production. So with respect to the Broken Hill project, we're looking to recut it at a lower break-even point, something in the teens, in the cobalt teen price per pound. We're looking for a much smaller capital spend, so it'll likely just be a 2,000 tonne or 1,500 to 2,000 tonne a year producer, which is still sizable, but it's not the 3,500 tonne initial project scope. We're looking to get that out to the market by middle of next year as a PFS. The project will have its day, but we've just got to make it leaner, and rather than wait for the cycle to turn, we've got to make it leaner and prepare it for a lower pricing environment.
Okay. On the remining technology, is that something you would look to license?
Yeah, thank you. That's a great question. Being a junior, the first question that's often the first question we're asked. You're competent. We've had a number of these partners visit us at Broken Hill to see the process, the scale of what we're doing. And so the question is, are you a technical or royalties provider? The answer is we're not. Our core business is that of a joint venturer. So we want to have skin in the game of this extraction. I'll tell you why that works for even the larger incumbents that hold these waste streams. One, this is an unknown technology to them. It's the fact that we've been doing it for a number of years only gives them so much comfort. If we as a partner come in and actually help them through their own feasibility studies and then ultimately their own construction commission phase, it gives them a lot more comfort than us just sitting across the fence and saying, well, there's the technology, off you go. So it's our core model to help them, through their own feasibility into the construction, commissioning and operations phase, and actually help train their people. Now, typically on those sites, it'll be their people. We're an Australian business. We don't really have a lot of expertise in foreign jurisdictions and operating. But what we will do is support them all the way into production and then ultimately operation. And the best model for us is to be a joint venture partner. We are very, very keen to set up a marquee site, a marquee being an exemplar globally. And whether that ultimately is Hudbay or whether that's ultimately somewhere else, we think that's only a matter of time before we get this business on the global map.
Okay, well, I think that was the last question, Joe. So thank you very much for taking time to host this webinar with us today.
Thank you. That's been my pleasure.
Just as a reminder for our audience, our next webinar will feature Argentina Lithium and Energy, and that's tomorrow, July 3rd at 2 p.m. Eastern. Thanks for tuning in with us, everyone. Have a great day.